to Driven by Wealth, your ultimate destination for financial insights, strategies, and inspiration. If you're new here, make sure to hit that subscribe button and join our forward-thinking community. And if you find value in today's video, give it a thumbs up, share it with your friends, and leave a comment below. I'd love to hear your thoughts. Today, we're going to dive deep into how to invest like Warren Buffett. Imagine having Buffett as your personal mentor, guiding you step by step. We'll explore identifying quality investments, building a diversified portfolio, and managing risk while staying disciplined. Let's get started. Warren Buffett, often called the Oracle of Omaha, is renowned for his exceptional business acumen. He's not just a brilliant investor, but also a wise and humble leader. Buffett's success can be attributed to several key qualities. 1. Patience. Buffett is known for his long-term investment strategy. He once said, "The stock market is designed to transfer money from the active to the patient." His ability to wait for the right opportunities and hold investments for decades sets him apart. 2. Value investing. Buffett follows the principles of value investing, seeking out undervalued companies with strong fundamentals. He famously said, "Price is what you pay. Value is what you get." 3. Frugality. Despite his immense wealth, Buffett leads a modest lifestyle. He believes in living below one's means and investing wisely. As he puts it, "Do not save what is left after spending, but spend what is left after saving." 4. Integrity. Buffett's reputation for honesty and ethical business practices is unparalleled. He advises, "In looking for people to hire, you look for 3 qualities: integrity, intelligence, and energy. And if they don't have the first, the other 2 will kill you." Identify quality investments. Let's jump into identifying quality investments. Just like Buffett, he focuses on companies with strong fundamentals, a history of profitability, and a durable competitive advantage. First, look for companies with a solid financial track record. This means consistent revenue growth, stable profit margins, and strong cash flow. A great example is Coca-Cola, which has demonstrated steady growth and profitability over the years. Second, consider the company's competitive advantage. This could be a strong brand, proprietary technology, or a unique business model. Apple, for instance, has a powerful brand and an ecosystem of products and services that keep customers coming back. Third, evaluate the company's management. Buffett believes in investing in companies led by competent and ethical managers. Look for leaders with a clear vision, a track record of success, and a commitment to shareholder value. As Buffett would say, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." So, what are some companies that you think meet these criteria? Share your thoughts in the comments. Build a diversified portfolio. Building a diversified portfolio is crucial to spreading risk and maximizing returns. Here's how you can diversify your investments like Buffett. First, invest across different sectors. Diversification across sectors like technology, healthcare, consumer goods, and energy helps protect your portfolio from sector-specific downturns. Second, consider different asset classes. While Buffett primarily invests in stocks, he also appreciates the value of other asset classes like bonds, real estate, and even cash. Diversifying across asset classes can provide a balance of growth and stability. Third, think globally. Investing in international markets can expose you to opportunities that might not be available in your home country. Companies like Nestlé and Toyota are global leaders and offer diversification benefits. Buffett often says, "Diversification is protection against ignorance." It makes little sense if you know what you are doing. So, how do you diversify your portfolio? Let us know in the comments. Manage risk and stay disciplined. Managing risk and staying disciplined are key tenets of Buffett's investment philosophy. Here are some tips to help you do just that. First, always do your homework. Thorough research and due diligence can help you avoid common investment pitfalls. Understand the business, its competitive position, and its financial health before investing. Second, avoid emotional decisions. Markets can be volatile, and it's easy to get swayed by fear or greed. Stay calm, stick to your strategy, and avoid making hasty decisions based on short-term market movements. Third, have a margin of safety. This means buying stocks at a price lower than their intrinsic value to cushion against unexpected downturns. Buffett often seeks stocks that are undervalued but have strong long-term prospects. Fourth, think long-term. Buffett is known for his buy-and-hold strategy. He invests in companies with the intention of holding them for years, if not decades. This long-term perspective can help you weather market volatility and benefit from compounding growth. As Buffett wisely puts it, the best investment you can make is in yourself. What steps are you taking to invest in yourself this year? Share in the comments. The Buffett Way. Investing like Buffett requires identifying quality investments, building a diversified portfolio, and managing risk while staying disciplined. By following these principles, you can make more informed investment decisions and work towards achieving financial success. If you're ready to start investing like Buffett, begin by researching companies with strong fundamentals. Diversify your portfolio across sectors and asset classes, and stay disciplined in your investment approach. Let's recap the key takeaways from today's video. Identify quality investments. Look for companies with strong financials, a competitive advantage, and competent management. Build a diversified portfolio. Spread your investments across sectors, asset classes, and geographic regions. Manage risk and stay disciplined. Do your research, avoid emotional decisions, have a margin of safety, and think long-term. If you found this video valuable, don't forget to hit the like button, share it with someone who needs to hear this, and subscribe to Driven by Wealth for more insights and strategies. Let me know in the comments which Buffett principle you're most excited to implement. Thanks for watching, and I'll see you in the next video.